New York Reuters. It has been a rough 16 years for General Electric Co. GE, and its shareholders. File photo. A man walks past the Global Operations Center of General Electric Co. in San Pedro Garcia, neighboring Monterrey, Mexico, May 12, 2017. Reuters. Daniel Bess. Aerial file photo. When recently retired Chief Executive Jeff Immelt took over at the helm of GE in September 2001, the conglomerate was the most valuable U.S. publicly traded company, giving it outsized influence on the stock market. In the years since, its annual net earnings have shrunk 35% and the stock has been effectively dead money, down more than 40% in price and posting a negative total return even after reinvesting its juicy dividends. Along the way, GE's sway on markets has withered. The stock now has about 1/4 of the weight on both the blue-chip Dow Jones Industrial Average, DJI, and the large-cap benchmark S&P 500, SPX, that it had back on Immelt's first day. On Friday, GE reported its last quarterly profit of the Immelt era, well below Wall Street's expectations. Immelt's successor John Flannery derided the results as horrible and pledged sweeping change. The following statistics highlight GE's stock troubles and its fading market influence. GE's weight on the price-weighted Dow was 2.86% when Immelt took over, according to ACUSP Dow Jones Indices, when the stock was at $40, around the middle of the pack among the 30 members of the index. With the stock closing below $24 on Thursday, the lowest in the index by a margin of more than $10, it had a 0.7% weight. The shares closed at $23.83 on Friday. At their current price, GE shares would have less than 1/10 of the impact on the Dow as Boeing Co. BAN, the highest priced stock in the Dow at more than $260 a share. GE is the lone remaining original component of the Dow, one of the 12 companies tracked by Charles Dow starting in 1896. But it has not been in the index continuously. GE was replaced and returned twice at the turn of the 20th century, but has been consistently a component since November 1907, nearly 110 years. Since 1976, a component change in the Dow has occurred on average about every 2.75 years. The last shakeup, when Apple Inc. AAPL replaced AT Inc. TN, occurred in March 2015, just over 2.5 years ago. Apple's market cap was about 1/160th of GE's when Immelt took over, but is now 4 times larger and owns the mantle of the world's most valuable publicly traded company. Could GE get the boot in the next change despite GE's troubles? Dave Nadig, CEO of ETF.com in Chicago, was skeptical that GE's recent struggles would push the stock out of the Dow. "I don't think that they are going to get kicked out of the index because the performance is bad," Nadig said. "You'd have to believe that the core of their business had really changed. It is not just in the Dow that GE's influence has shriveled. Once the heaviest component of the market cap-weighted S&P 500, GE now accounts for less than 1% of the S&P 500's market value. It accounted for about 4% when Immelt became CEO. New CEO John Flannery took the reins in August from Immelt. Since the start of Immelt's tenure in 2001 to Friday, GE's shares have declined 41%, against gains of more than 130% for both the S&P 500, SPX and the Dow. GE pays a rich dividend, but even reinvesting those in the stock failed to pull investors out of the red in the Immelt era. Through Friday, the stock had dirt a total return of negative 0.4% since September 2001 against comparable gains of 222% for the SP and 254% for the Dow. Investors are speculating that the dividend could be cut. It would not be the first time. In February 2009, GE announced plans to reduce its dividend as its then massive finance arm grappled with the financial crisis. It cut the annual payout 68% to 40 cents a share, but it has since recovered to 96 cents. GE's dividend yield of about 4% is currently the second biggest in the Dow, trailing Verizon Communications Inc.'s VZ, and 4.8% yield. For a graphic on GE's market value versus Apple's, click bit.ly 2Guaro7W. For a graphic on GE's weight in the S&P 500, click bit.ly 2HTR7MH. Reporting by Lewis Krausgoff and Dan Burns. Editing by Bill Rigby. Our standards to Thomson Reuters Trust Principles.